Ladies and gentlemen, please welcome on stage Ritesh Agarwal and Manav Thadani.
Thank you, Ritesh. Good morning and welcome to Indonesia. By the way, gentlemen, I know how many of you have seen OYOs? Have any of you seen OYOs in Bali? Well, guess what? You've done one better than Ritesh because this is his first trip to Bali. So welcome to Bali, Ritesh. I don't know too many CEOs who've managed to get their hotels to open in a destination before actually getting there themselves. So that's where we are. So someone told me recently, a tweet, that you're getting close to 1 million rooms. Is that true? And what is the current status of your room count? Because it's kind of difficult to keep track.
To begin with, thank you so much for having me here, Manav. I always question whether I should get the chair closer to you or farther away. So I'm taking the big risk of getting the chair closer to you. Om Swasthya, Salam Baik. Thank you so much, everybody, for joining us here today. The first question, which is about me being in Bali, I don't see this as a matter of pride. I should have been here before we opened OYO Hotels here, but I'm happy to share that in Indonesia, we manage over 1,000 buildings now, and just in Bali, close to 100 buildings. But as you all know, we are just getting started. I'm happy to be staying. I stayed last night at a collection by OYO. It's just amazing. You can stay in such amazing places for price points never imagined earlier. That's a shameless plug for our brand. But that said, coming back to the question of size of assets. So OYO today, if you look at our revenues worldwide, roughly 30% of our revenue is China, which is one of the biggest markets in the world. 30% of our revenue is India, which is also one of our biggest markets in the world. 20% is United States and Europe, which is also an important market for us as we speak, and both US and Europe are our fastest growing markets. And of course, Southeast Asia, Middle East, and increasingly Latin America. So we see OYO increasingly becoming into a global company with widespread revenues, but primarily distributed between Asia, Europe, and North America. In terms of rooms, the hotel room and vacation home rooms are two different counts. Just the hotel rooms last we publicly announced was a little over 900,000. So the news of close to 1 million is correct, but where is it currently, we aren't in a best place to disclose. But last we publicly announced it was a little over 900,000.
So is OYO an abbreviation for something? Or how did you come up with that name?
So, one of the things that we've constantly thought about is if you look at large global hotel chains, and if you primarily consider the top 2 or 3 of them, these are companies which have been designed keeping in mind the upper middle income equivalent sort of consumer classes. We felt the world has 3.2 billion middle income people who, when they travel to another city, are not really independent. They need to ask their friends, relatives, maybe their parents about what's the best option to stay in the other city. It could range from everything from the best hotel their parents or relatives used to stay in, all the way through to just searching online and figuring out whether you're getting the right place or not. We felt people should genuinely be independent, where people should know that if there is a brand I know which I can trust, whether I'm in Texas or in Tokyo, I should be able to get a great quality space at the right price point. So OYO means on your own, being independent. But as you know, in India, 70% of our hotels are actually not limited service. They're full service, even though we are economy. As you know, in India, full service works in every price point. So we stopped telling the abbreviation to other people because we were worried that when we said on your own, people might think we are limited service.
So you don't use on your own anywhere?
We don't say this, but this was the initial thinking when we came up with the name.
And full service, is that like include room service? Or?
Room service, in-room dining, couple of cuisines. So yeah, it's...
And that's all in-house, or do you outsource it and it comes in?
So the 70% I said is a combination of 40% of them is properties where you have real kitchens. And those kitchens actually don't just deliver food within the hotel. they also partner the third-party food delivery companies
Some of those cloud-
to do the delivery. So it's
Right.
like a cloud kitchen equivalent. And 30% of them are in the same neighborhood. So we would send the food from one of our hotels to the other hotel to be able to be efficient.
So is there any different in the way you're doing things in Indonesia? I mean, how are you finding Indonesia? If I'm correct, it's your third or fourth largest market right now.
So yeah, it's among the top 5 in the world for us, and as an individual country, and by number of rooms. I think Indonesia, from our perspective, is 3 interesting things. The first one is the size of market is unprecedented. The number of keys that you have in the, all the way from unbranded to mid-range brands where you can also have brand flag changes is possibly one of the largest markets in the world. I would put it as top 5 or top 6. Now, within our team, our Latin American team always keeps pushing me on saying that Brazil is bigger, and I keep saying I think that Indonesia is bigger. But that besides, I think this is one of the biggest markets in the world. The 2 other things which I feel more excited about are as under. The second is the millennial usage in Indonesia is possibly one of the most exciting in the world, and let me give an example. If you look at ride-hailing, for instance, you combine India's 2 largest ride-hailing services, multiply that by 2, that's possibly the revenue, at the least, that the Indonesian ride-hailing companies generate as we speak today. So the market size, even if you compare to India, they're multiples larger in some of the organized segments, even in organized retail as I track it. So I feel that the millennial usage of new age brands is very popular, and they do not want to buy goods, right? So people don't save money to buy their next beautiful bag or buy their next beautiful dress. They want to save that money to have that beautiful vacation next time. So that is the primary reason why we're seeing such, we have 5 million customers in Indonesia in less than 10 months of operations here. That's because once consumers find something that's a great product at the right price point, they say, I want to go try this thing over and over again. And last but not the least is the digital penetration. Mobile is growing in Indonesia quicker than ever before. Every day, close to, just in Indonesia, 150 to 200,000 people come on our mobile app in Indonesia to try and check for some space to make a reservation for. So anyway, I think these are 3 things that we feel very excited about: large market, millennials, and digital penetration.
So you're giving away your trade secrets of why you're able to grow faster than the traditional brands.
Yes.
So I have a question for the audience.
Only for you, Manav.
Okay. I have a question for the audience. How many of you have ever stayed at an OYO hotel? Can we see a show of hands? 3, 4, 5. So Ritesh, you have a huge market here. What are you going to do to convince them to come and try staying at an OYO?
So today we have a different consumer segment that we primarily focus upon. So that's a nice way of saying that this is not our customer base yet. But that said, I think the good news is we've been launching some of our brands which have seen great results. For instance, our Palette Resorts, which is our resorts brand in India, which has been doing extremely well. The occupancies have gone up from 20% to 80%. It means Palette because they exist everything from hills to sea, ocean, and so on. And the other business that's growing very quickly for us is our vacation home business. We manage 250,000 vacation homes in Europe, all the way from the Nordics to south of Europe. This is the 3rd largest vacation home company in the world. We believe both of these are products that I'm sure over time some of you will get to experience. And some of the times you might not even know that the brand is owned by us, which we are trying very hard to make sure that you know. We will try, just so that we have more direct distribution rather than paying third parties for the distribution, like we were just talking about a little while earlier.
Sure.
So that's what we plan to do to convince more of the people here to come over time. But currently our focus remains in the middle income millennial generation that we are very heavily focused towards.
Sure. So I've come to realize that you've been a bad boy and you went and invested in Hooters in Las Vegas. Do you want to tell us about Las Vegas, Hooters? What were you doing? Were you out drinking late at night or?
Yeah, so funnily, I've been into Vegas also for just one day for a conference. So.
And you went and bought Hooters after that?
No, that was a couple of years back.
Any of you want to sell a hotel? He's in Bali today.
So coming back, let me talk about, so United States is a market that's the fastest growing for OYO. Every night I go to sleep, there's one OYO hotel that opens in the United States for OYO. And if one hotel don't open, maybe we don't sleep. I'm just kidding. But yeah, but that's the speed in which OYO is accelerating in the United States. And the reason is as under. In the United States for way too long, asset owners have had to have pretty painful times with big hotel chains. It would range everything from PIPs show up every couple of years. Your ability of starting a new hotel is linked to getting debt, and your ability to get debt is linked to getting the ability to get a flag. And more often than not, asset owners essentially are always waiting for that 6th year to get the refinance to be able to get a little bit of extra cash to buy their next asset. We feel that's unfair. So what OYO does is we bring a novel partnership model where we go to asset owners, provide capital investments to improve their assets, so the RevPAR goes up, and if the RevPAR goes up, both the asset owner, us, and the customers win. So when we are growing this aggressively, we continue to get very interesting inbounds of assets, and our maths is very simple. We are a commercial animal, so we sort of look at our mission, which is better lifestyle for people, and second, we look at IRR, saying that whether the returns are exciting enough. Vegas is a market where, if you look at the last 5 years, the RevPARs have remained broadly stable, and there's been no new asset that's opened in the last few years. But this year is special because the NFL stadium is opening up, which is exciting because that opens up a large volume of traffic coming into the city. And the second is the number of shows and events are growing very aggressively to be able to accommodate the whole new founded family traffic in the city. So from our perspective, what we felt was Hooters was an asset which is known for as a hotel brand, not the restaurant. I think the restaurant we're still going to keep. But the hotel as a brand was not exciting a lot of family-led travelers, which is essentially becoming the key brand or the key pull for people within Vegas. And it's in the south of the Strip, which is a great location. So we looked at the deal, we found it interesting, and we partnered with Highgate, run by Mehdi and Mahmood, who are some of the smartest hotel investors in the United States. So we're very happy about the acquisition. It's been a couple of weeks, and the initial results also look very exciting.
Did you also go to the casinos?
I think the casino is a very exciting opportunity.
Yeah. Did you go to the casinos and
No.
did you try one of those machines?
No, I haven't.
With the kind of run you've had in the last 3 years, you could have done pretty well, I think.
No, I think we've never gambled. It's always been, we always say every overnight success is a 5-year-old story. So we've stylistically put a certain design of effort. Now, I can't say that all of this was by design. Some of it is luck. But there's a lot of things that we've done by design. But yes, I haven't checked out the casino, but a big part of our revenue is just slot machine. So you can't go wrong on that.
Right, fair enough. So one of the ability to run a successful hotel company is to be able to raise funding consistently. And that's something that you've done a great job of. When it comes to adding funding, and any thoughts on that, and how do you personally and how does the team deal with that?
So look, I think there are two important perspectives on capital raising, and it is sort of linked to capital allocation. And the way in my mindset I think about it, I focus on capital allocation, and I feel that if I allocate capital well, there'll be more capital which will be searching for this kind of allocation to say that, please take my capital as well and allocate in the same way you've done in the past because the returns look very exciting. So that's the way I think about it. Now, that said, I think the first perspective that we've taken a very close view on is we don't benchmark ourselves to hotel companies only. Because we feel if we just search for capital looking at hotel investments, the capital is quite small that comes into this sector alone. But if you benchmark or look at the return rates in comparison to multiple other sectors, think retail, think multiple other segments, apparel, and so on, and your returns are better than the investments that are happening in all the other segments, people sort of look at you in the bucket of as sector agnostic investment as a criteria. And the second one is we are an entrepreneurial company, so I put my money where my mouth is. And that makes other people feel that if Ritesh is willing to put his money where his mouth is, then we should also be able to invest in the same dream.
Yeah, and related to that, recently, very unusual for a founder to raise money to buy back some shares. You've done that. Any thoughts or anything that you're willing to divulge on that? It's very rare to find a promoter at this stage of valuation to go back and buy I think
Yeah.
30% of the company today?
I can't talk about the specific ownership because it's still with the regulators for the final approvals. But what I can share is two things. First is, if you look at entrepreneurs worldwide, they all would like to have decent size of ownership in their businesses. And there are some actually, company, I mean, Michael Dell did it. Of course, he was at a very different stage of business. We are much younger and much smaller as a business. But he bought back Dell shares from public markets and took it private, and one of the best take private to public M&As ever done. I think for me, it was fairly straightforward. I started my company when I had almost nothing. I was right out of high school. I used to live in a barsati. Barsati in, it's a very Indian term. What it means is, having a thatched roof, small room at the terrace of your house, which people rent for somebody moving from another city. So that's where I started my company, right? So my total savings at that time would have been less than $100. From there, I've been very lucky to get to where we have. So today I had the resources and the ability to convince financial institutions to support me with the capital to increase my ownership. And I felt at any point of time in my life, if I could do it, I will do it. And I had the opportunity to do it, so I feel very lucky to have the opportunity.
I'm going to be rude. May I ask how old you are?
Yeah, this is something that I have tried to get out of the cliche for long. I actually made a 10-pointer list of things to say so that this question never comes back. But with Manav around, you can't stop. So I was born in. I'll
Give
try
us
to.
the age.
Yeah.
You're making everyone work.
So I'm 25 now, but getting older by the day.
But, and the reason we were joking in the office, because every time I hear it, you're always 25. And I don't think so that has changed
Yeah.
for the last few years.
Because you've been meeting me way too much in the last 1 year. But it's amazing. The exact same thing you said, there was actually, I saw some blog which said that Ritesh has been 22 forever. I felt happy that at least people know that I've become 25 otherwise. But I think personally that I grew up publicly in front of the hotel ecosystem. I was meeting Chris recently from Hilton. And he said, last time I met you, you were 25, right? I said, no, I was 22 then. I've grown older ever since. So I feel I've publicly grown up in front of the broader hospitality ecosystem.
So, I know you're young and you travel like no one else probably does in this room. What does your family think of you? And do you have any siblings? And do they have advice for you?
Yeah, I have. I'm the youngest of the lot. That is why I could do all the things I'm doing. I have 3 elder siblings. All 3 of them, were Asian parents' dream children, engineering, business school, consulting jobs. That's essentially what middle-class Asian parents would love for their children to be. I was a black sheep, trying to do all kinds of new things. But I think all the 3 siblings, their advice to me always is, you should open a hotel here or in some other city and so on, because they use OYO a lot. But my parents still don't get what I do. They sort of say that we are happy about what you do. We see 2 OYOs from our balcony, which is great. But hotel, why would you don't even have a hospitality degree, so how do they let you do what you're doing? So I try to convince them saying, I'm just lucky to have my job, so you should just be happy with that, and they're happy with that.
Can you share with me that, as an entrepreneur, you've done phenomenally well in the last 3 years that I've at least known you. What are the key attributes to a good promoter or entrepreneur? Do you have any mantra?
So first off, I don't think we are successful yet. We're just getting started. But from our little bit of learning in my career in the last few years, my learning has been threefold. The first is invest in infrastructure and competency more than ever before. So we've invested in 4 key infrastructural points. The first, underwriting. We underwrite our global assets on a real-time basis for potential RevPAR, IRR, ROE, and ROCE on a real-time basis. And this is from the historicals of last 50 years. So during 9/11, how much RevPARs fell, what was the EBITDA and NOI drop, and hence what could be the potential deal that we should make for the next 15 years is the potential underwriting we do on a real-time basis by using 1,500 data scientists and engineers worldwide. That's one thing that we've invested very aggressively in, which is why we are making over 20% average building level profit worldwide. The second is renovations. We renovate our assets, wiring, piping, ceiling, flooring quicker. But not just that. We use data science to predict what is the Capex investment that gives us the best RevPAR. So we sort of call it the Capex to RevPAR ratio. That ensures that we're not just investing Capex because some designer made something in Washington. The Capex is decided by means of the local neighborhood design lens of saying that what design gives us higher RevPAR, which ensure that you're investing only the right amount of Capex rather than just investing atrocious amounts, which makes development very hard. The third is operations. We run large number of OYO skill institutes across the world, including here in Indonesia, where we use technology to be able to train people. And technology in the sense of videos and a lot of things that we work together on and talked about as well. Wherein, for instance, you'd have a video where the housekeeping person comes and knocks the door 5 times, and then it says this was wrong. You knock the door 3 times, and then you say something at the end, you look at the watch. And then there's an examination which is digitally conducted. And the fourth is yield management. We change our prices over 100 million times a day worldwide. 60 million ex-China. We think about China and rest of the world separately in our maths. That allows us to make sure that we get the best yield per square feet for our assets. So we get the asset at the right price, renovate it quick, operate it well, and fill it up. And this is the 4 things we've continuously invested more in the infrastructure and competency of. The second is management. As you know, your friend Aditya is our leader in India. He's a fantastic operator. Our leaders in every part of the world are some of the best in their countries. Our Chinese leader, Sam, used to be chairman of PepsiCo China, and before that was CEO of Accor China, and so on, Accor Asia Pacific, actually.
We have the...
Earlier, long back. Is somebody from Accor here? You know Sam Shi? Okay, but China? Short time, yes, but he was there. So Sam is our leader in China and was leader of PepsiCo after that, which is one of the leading beverage companies worldwide. Our Japanese leader, Hiro-san, used to be leader of one of the biggest telecom and technology companies in Japan, and we've seen this evolve in every other part of the world.
So,
the third thing,
go ahead.
The third thing is capital allocation. We love to invest in infrastructure of Capex as well. Worldwide, we've invested over $500 million in our own equity capital in Capex, and we've raised more in the form of debt to be able to make sure that we don't just rely on third parties and asset owners to make the Capex investment, we take the risk ourselves. And our belief is combination of competency, talent, and making sure that we take the risk intelligently is the 3 things that helped me to be able to continue to invest in the manner we have.
So, in many ways, OYO is also a tech company because I've often heard you say that you're not necessarily a hotel, but you're in the technology side of things. And a lot of tech companies are not profitable or they're loss-making. And if I'm correct, currently OYO 2 is yet to turn profitable. Any thoughts on that in terms of when you may turn profitable?
So it's hard for me to give a guidance here that what will be our potential profit time frame, but there are 2 things I can share. The first one is at a building level, we make margins worldwide because we believe that's the basic. But that said, we are investing so heavily in our corporate side. We have close to 11,000 full-time employees just in China who are working to make sure that on the background we create enough competency for people. Close to 1,000 engineers just in China and 1,500 worldwide who are working on technology, data science, and so on. So we're investing for that. The result of that is, on a year-on-year basis, we publicly issue our financials. So if anybody of you would like to check, you can just go online and search OYO annual report. Even though we are a private company, we issue it publicly every year. On a year-on-year basis, our net profit, net losses have reduced by 50%. So because the company is growing, there's economics of scale that is kicking in, and the building level profit is growing quicker than the investments we are making at a company level. So if this continues, someday we'll be profitable. What is that someday? Hard for me to say here.
Right. And you've also invested in alternate areas other than hotels. So I think you've done some co-work, Innovate, if I'm correct, in India. Is that just India or is that outside of India? Just India. And are you looking at doing other stuff in other parts of the world?
So the way we think about ourselves is we are in the confluence of 3 industries: consumer service and hospitality, technology, and real estate. These are sort of if you make a Venn diagram of these 3, OYO sort of sits somewhere in the middle. And if you think about real estate yield generation, there are 4 things that really matter. The first one is getting the asset at the right price, renovating it quick, operating it well, and filling it up. These are four things that really matter if you look at the real estate business as a whole, which is why OYO not just operates hotels, we also operate one of the largest co-living companies in the world. So we have a large co-living operation in Japan, over 30,000 apartments operated by us in the Japanese market, close to 500 or so in Indonesia, and close to 30,000 in India as well, and growing as we speak. We also operate cloud kitchens. We also operate the biggest individual banqueting company in the country, where individual banquets are managed by us in a brand called Weddings. It's Z at the end. And we also operate a co-living segment called Innovate, which is, of course, doing well in India. But it's India only as a focus. The reason of Innovate was we had, in India, 10,000 corporate clients. Okay. And they would look for an office space, and we felt we understand real estate enough to help them, and we saw good results in the early days.
So I'm going to put you a bit on the spot and ask you for one-word answers. Your favorite holiday destination?
Oh, hard to say, but Portugal.
Okay. Your favorite hotel chain?
OYO, no questions asked.
Non-OYO?
Non-OYO. That's a hard one. But if I have to pick a name, I would, the different hotels I like for different reasons. I like Ace and Standard for being the new age lifestyle hotels. I like Oberoi for service. Worldwide, there's nobody else who can compete with Oberoi in service, I believe. And at scale, I think Marriott and Hilton know being able to execute scale in their segment really well. So I respect them quite a bit as well.
An iconic hotel or brand that you would like to convert to an OYO?
Oh, that's a tough one. But, you know, this is a hotel that I will name, but I don't think, I want to make sure that this is not something that we intend to do, primarily because there was an Indian who owned it earlier as well, and it did not do that well. This is the Plaza Hotel in New York. I would like to convert it someday, but I know that it has a history.
Okay. Who has been the greatest influence in your life?
That's a tough one. But I think, you know, two people. I think one is Peter Thiel, who started PayPal, early investor in Facebook, and somebody who supported me before starting OYO in the very early days. He gave me $100,000 and said, you should sign a contract that you will stop out of university. I felt that was great. You get paid not to go to university. So Peter Thiel. And I think the second one, you know Bejul, right? Okay. From Lightspeed. So one of our earliest investors, Bejul, even though he was an investor, he's almost been like an operating partner to me. You know, the 2 a.m. friend, when things break and you need to call somebody for help or just call somebody to say that stuff's broken, I think he's been that person. So these two people. So
what do you think, one word, what do you think of, I'm going to just list out 5 things, and what do you think of them in one word? Indonesia.
Beautiful.
Airbnb.
Partnership.
Four Seasons.
Luxury, clearly.
Okay. Your investor, Matsu Soin, son?
Visionary.
Okay. Hotelivate.
This is hard to say in one word.
It's okay, you don't have to answer that.
But if I were to say in one word, I would say friend.
Okay. Thank you. I'll take questions if there are questions. Otherwise, I have more. What advice will you give? Because you have had an amazing journey. What advice would you give to a young entrepreneur?
Oh, young entrepreneur is easier. I really hope that you did not say hotelier, because I said I need more advice because we have so much to learn. But young entrepreneur is still hard to give advice, but if there's one thing I've learned in my short career is perseverance. There is always light at the end of the tunnel, and making sure that you're perseverant is one of the most valuable traits for a young entrepreneur. I feel way too many young entrepreneurs give up too early, saying that the big incumbent will hurt me. And I feel that if you're at it, we overestimate the perseverance of incumbents. Ability for a new company to be able to make a dent is much higher if they're perseverant.
Okay. So we have some questions up there. The first one, I think you've already kind of answered, but there's one which is interesting. You're only 25. What will you do when you're 50?
we're a very small company in comparison to where we want to be. I'm 25. My retirement age probably will be 75. Our company age is 65. I'm convincing them to try and increase to 75. So I hopefully for the next 50 years will continue to bring better lifestyle for middle-income people.
Right. The other question is, they say you can convert a hotel from unbranded to branded in 14 days. The question just disappeared. So I guess the question, I can't read it when it converts to a blue. So is that real branding? Why can't the traditional brands do the same?
Oh, I think traditional brands should do the same. I don't think the traditional brands can't do it. And I think increasingly we are seeing traditional brands do it. So if I see China, a small shareholder of ours, also of Accors, a company called Huazhu, which is China Lodging Group. They recently launched some of our competitor brands and we compete in China together. And we're seeing more of that in other parts of the world. So we feel traditional brands, could do it and should do it, but it's of course their prerogative.
Right. Thoughts on Australia, since there's a question on when you're going to Australia?
Oh, Australia is very exciting. Great market. We've done a lot of work there, great RevPARs, big opportunity, but we are busy doing what we're doing now. We have a lot in our hands. We like doing a few things and doing them right, and we have more than a few in our hands now. So we are very focused on doing what we're doing now.
So the last question before lunch, what keeps you awake at night?
First one, given I travel and, work reasonably hard, I sleep like a baby. So sleeping, no problem. That's a jovial answer. But that said, what keeps me awake, the one thing that I always worry is great companies are built with great managements. They're not built with one individual or just a great idea or just with capital or great technology. They're built with great management teams. And OYO is today, our last publicly disclosed revenue run rate globally, not India alone, was upwards of $3 billion, growing 4.5 times a year. At this growth rate, making sure that we continue to bring the best leaders is extremely important. Because if we don't, you could really just get stuck up in being able to fix that scale for 6 months. So our biggest challenge and our biggest opportunity is bringing great management teams who think and operate like owners, who don't think that this is a one-owner company, who think like they are an equal owner to Ritesh in this big mission. If we can keep doing that, I think the impact could be much larger.
All right. Thank you, Ritesh. I guess you're going to join us for lunch, so some of the audience may want to just reach out to you and just spend some time.
I'd be around. I always get to learn a lot from this kind of gathering, so please feel free to say hello. I will try to come by and say hello to a few people.
Thank you.
Manav will help me. Thank you.